Good morning, everyone. Please let me know if you can hear me.
We can hear you.
Okay, great, very good. Fine. So, welcome into our fourth lecture. Last time we have discussed the order book composition, the principles of market microstructure, bids and tasks, what happens when an aggressive order comes through, how an order is filled, and basically how it is filled and how orders are converted into trades. So what is the difference between trades and orders and how we obtain trades in that case? Fine. So today let us see what we can do with this information. First of all, a few remarks. You have already seen that, no doubt, in working with your data, but let us probably dwell on some details which might be helpful once again. So when you process your data, then you work with individual orders. All right, so basically what you do, you read the stream of individual orders, you compute the order book at each particular moment. And there are three actions which you can have with your uh, basically with your orders, right? So each order has an action associated with that, and order actions are the following. So you have number codes for add, delete, and change a given order. So to add an order is clear. So indeed, a new order comes into the order book, and this order must be, uh, in order to come to the order book, the order must be passive. So can you tell me, please, in this stream of the orders with add action, do you also see the aggressive orders, which will not become part of the order book, or the aggressive orders are not there actually? As far as I understand, the aggressive orders are there, and you need to figure out that they're aggressive, right? So in the data, you understand the question. In the data you're working with, there are add, delete, and change actions with the orders. Each, let me say, each line of the file which you process corresponds to a certain action with the order. Add order, delete order, change order. All right? Add means that a new order comes to the order book, but the order may be both actually passive and aggressive. Passive means it is simply to be placed into the order book. Aggressive means that the order will immediately result in trades. Is that correct?
Yeah.
Okay, so add occurs for both actually passive and aggressive orders. Obviously, because you are building order books, you need to tell the difference. Passive ones are to be inserted into the corresponding site, obviously, of the order book. Aggressive ones, you simply skip because yes, you know that they would result in trades, but at this moment you don't really need that. They could be important, and I mean analysis of them, and we today will discuss how they can be used. But for the moment, when you build the order book in order book construction by itself, you don't need them. They will match other orders in the order book, but for the moment they are to be skipped. Okay, now I will let you think for a few minutes what delete means. Delete is a much more interesting action than it might seem. So delete, what is delete?
First of all, it's just delete from like user, like from person.
One is the user initiated delete. What are others? Think for a minute.
Maybe it's system initiated deletes when the trading volume has dropped to zero and we need to subtract it from the system.
Well, okay. Delete, first of all, means really cancellation by the user. That's completely normal. Obviously, if you entered an aggressive order in the system, then you cannot cancel it. You can only cancel an order. So, for example, you do an aggressive buy, and then a millisecond later, you realize that you don't want to buy. Can you cancel an aggressive order? No, you can't. It is far too late. You can cancel only an order which is passively placed in the order book and stays in the order book at least for a short while. Then, if you are still in time, you may cancel it. For aggressive order, it is really far too late because the sequence of actions related to each particular order is really sequence. So uh, when the order is added, it is not possible to send the delete after add in such a way that it will somehow overtake add and result in cancellation. No. If you added an aggressive order, it first results in matches and then mm, there is nothing to cancel anymore. But if it is a passive order is placed in the order book, stays there at least for a short while, and then if delete arrives before this order is filled, then you can cancel it. Obviously, this is for passive orders only. Okay. Now, another suggestion was delete may occur by some system action. Yes, it is possible. And typically this happens, for example, at the end of the session. When we arrive at the final time, let's say 2350, then all current orders are removed from the order book. The order book is cleared, and for example, end of day system action. Whether it is possible in any other system action for whatever reason. Theoretically, it is possible, but very, very, very unlikely. That, for example, you placed an order and then for a certain unknown reason, unexpectedly, the system cancels it for you. Mm, might be, but very, very unlikely. Now,
But what if order was matched? Like we had an aggressive that matched it.
yeah, then delete simply can mean that a passive order has been filled. You are absolutely right. Passive order has been filled. This also means that if filled, it is deleted from the order book. So it may be deleted by user action, or it may be deleted as a result of the fill. These are three major reasons for delete. Maybe there are some others, but I think it is important to keep in mind these major three reasons. Well, in particular, I would say user cancellation, let's say a very typical case of user cancellation is when the user is really trying to modify the order. You can tell me, okay, there is a change here also. No, this change is a different story. So a user is trying, in particular, user is modifying the order. What does it mean, modifying? In most exchanges, and in Moscow Exchange as well, in the Moscow Exchange, there is no in-place modification. So you can't simply send an instruction with the action to modify your order in place. Obviously, if what does it mean to modify your order? To modify means to change the price, the quantity, or may even be the side of your order. Change, for example, buy for sell. Let's say changing the side is not a modification at all, even from a conceptual point of view. It is an entirely new order. You understand why? Because basically it is a completely new intent. You are buying first and now you are selling. So it is not a modification. It is really a completely new order. So in that case, what you do, you indeed cancel the original one and you place a completely new order, possibly on the other side. Changing price, if you remember the structure of our order book, changing price really means, yes, first you cancel your original order and then you place a new one. Changing quantity, when just a new quantity is to be inserted, but the price is the same, theoretically could have been done in place. But most exchanges, including Moscow Exchange, do not allow it to be done in place either. So there is no in-place modification in any case. Modification is a sequence of cancel, which is delete, obviously, plus new order, which is add. But it is important to understand that most often, when we see a user-initiated cancellation, it is not because the user wants to cancel the order altogether. It is because this cancellation is to be followed by a new order. It is a part of cancel replace or a modification sequence. That's why those cancellations occur very frequently, and it is completely normal. Otherwise, you might be surprised, for example, why do users cancel their orders that often? Is there anything just, strange about this? No, there is absolutely nothing strange. It is just part of cancel replace or cancel new sequences when the user just changes the order. We will see a typical example of how it happens and why it is important very shortly. So basically, delete, as we have seen here, is part of 4 possible cases. So user cancellation, which is an outright cancellation, just cancel and that's it, all right? Cancellation, which is a part of modify, to be followed by add with new parameters, yes. End of system, end of day system action, and passive order having been filled completely. It is completely eaten up by an aggressor. And finally, change is, what is change? What do you think? We already said that there is no in-place order modification. If there is a change, then there is only one case actually when change can occur. What is it? What do you think? Change is a part fill. You remember how part fill can happen? Asks, bids. An aggressor comes. This is how this operation is called when we aggressively fill an ask. Lift. You remember? A lift occurs. There was an order, for example, a single order at the ask side, for example, for 10,000, but an aggressor size is only 5. What happens with the passive order? It is part filled. It is matched with the aggressor. The aggressor receives his $5,000, and the order which was staying at the ask side reduces from 10 to 5. So it is part fill only. Price is same. Quantity is reduced, only reduced, it cannot be extended. Is reduced, but not to 0. So these are 3 actions. So for example, when you implement your order book construction, you can watch what happens with your change. This is yet another invariant, which is worth observing and which gives us some information about the validity of our order book operations. So when you get a change, you receive new quantity from this stream of orders. And first of all, obviously, this order which you change must already exist in the system. And secondly, the new quantity must be strictly less than the existing quantity, but greater than 0. This is your invariant. So for a change, new quantity is positive and less than the original quantity. Then it is a change which is due to a part fill. Okay? This should be quite obvious. When we do add, then the add contains all important information. So first of all, it is the order ID. Order IDs are valid for a current day only because all orders are cleared by the end of the day. So this is for this day. Obviously side, buy or sell. Buy is bid, sell is ask, price, quantity. The price may be missing. What happens if the price is missing? What does it mean?
It means we sell by the market price.
It is a market order. You're absolutely right. If missing, it is a market order. And if it is a market order, then obviously we know that market order is the aggressive order. And if it is the aggressive order, it is an aggressive order, then we already know that for the purpose of order book construction, not for any other purpose, but for the purpose of order book construction, you can ignore it for the moment. You can ignore it for the moment. I mean, you may be interested in some fields or traits which are generated by this order, but it will not come into the order book. Not come into the order book. Okay, the quantity obviously must be, if it is add, the quantity must be positive in any case. If the quantity is not positive, then something is wrong. Delete only has order ID. And then that's why you already know it from your practical sessions. You need to, apart from the order book, you need to implement, so for example, there was a certain order ID and this order for quantity 10 at this price. Let's say 75.41. The highest bid is 74.99. In order to, and then a delete comes with this order ID. In order to delete it from the order book, you need to find it in the order book first. But you don't know exactly where it is. And that's why you maintain an additional auxiliary map, which maps the order ID. So this is your auxiliary map, which maps your order ID to side, price, and it is probably a good idea to memorize the quantity. So when a delete comes, you already know, with this order ID, you need to delete it from, for example, asks, from this price level, and the quantity was this. So then you find this order in your corresponding side at the given price level, and you reduce the cumulative quantity by this constant. Obviously, if a delete happens, then your quantity of the order must be less than or equal to the cumulative quantity at that price level. It is always a good idea when you construct an order book not only to maintain bids, asks, and for each price level a sequence of orders. It may even be just a sequence of order IDs, but also have a cumulative quantity at this price level. So for example, here the cumulative quantity is 10, because there is only one order for the quantity 10. But if there is a 5 and 20 here, then obviously cumulative quantity is 25, and so on. This cumulative quantity at a given price level is a very important thing which we will take into account. So, okay. And then when the order is to be deleted, you check the quantity of this order as memorized in this auxiliary map against the cumulative quantity at this price level. It would be a trouble if your quantity to be deleted appears to be greater than cumulative quantity, then something was wrong with the cumulative quantity computation. Again, you probably delete it still, and in this case you delete the whole price level, but you produce a warning if this invariant is broken. All right? So there are quite a few invariants, in fact, which you may check, and actually it is a very good idea to check them while working with the order book. Okay, um, that's for delete. For change, change happens and you receive an order ID. And what are what are the other parameters you receive with the change? Only new quantity, correct? Why that? Because if it is a change, then the order ID is already in your auxiliary map. So by this order ID, you already know the side of your order, price, and old quantity. And therefore, you check the invariant that new quantity is, again, you remember, greater than 0 and less than old quantity. If it is the case, then you modify the quantity in both actually the auxiliary map and in the order book itself. And cumulative quantity at this price is reduced. You need to reduce it, reduced by the differences in quantity. So by old quantity minus new quantity. All right? So this should be pretty much obvious of how you deal with add, delete, and change. Please tell me if that's what you have been doing or if you have any questions related to that. And once again, it is very, very, very important to check and to produce warnings if anything wrong happens. The invariants, simple but important invariants, which we described here. All right. So basically, what we do when we receive this data from a file, we'll already know that the data might be incorrect to some extent. Our first objective of data mining, if you remember, is to provide some kind of data cleanup. This cleanup may be based on some statistics, which we do not implement yet, did not implement yet. There is no statistical learning as yet, but we'll come to that. But it can also be data cleaning based on very, very simple invariants like those which we identified here. So for that reason, it is very important to check those invariants and to produce warnings and corrective actions if anything wrong happens. So for example, and that is the question. For example, what would you do? What kind of corrective action would you apply if you encountered a change, but then you see that for whatever reason, new quantity is greater than old quantity? What do you think? Or greater than equal to? Can it happen? Yes, it can happen because you get a data which may not be perfect. There might be errors in the data. But how do you tackle this situation? So what do you do? You receive action number 2, add is 0, delete is 1, change is, no, delete is 2 as far as I remember. Yes, add is 1, delete is 2, change is 3. And you got change for a larger quantity. What kind of error recovery would you do in that case? Any ideas about that? It's difficult to imagine their recovery. But I would probably install the new quantity, even if it is larger than the old one, assuming that somehow, for whatever reason, probably the old one wasn't correct, something like that. And we now trust the new quantity, but it may very well be that the new quantity is incorrect. And because the new quantity is incorrect, it eventually will the order will eventually be filled, and then we'll have uh, a delete of this order. When it is delete, then all remaining quantity is removed. So even if it temporarily increased, then delete will clear this situation by removing the whole order with its remaining residual quantity. So it wouldn't be a disastrous situation even if this invariant is broken, although it will for a while give us incorrect cumulative quantity at the corresponding price level, which is not nice. So there might be lots of not so nice situations due to erroneous data. At least we need to produce a warning for all such occurrences, so we know approximately how many errors do we encounter with our data. That should be pretty much clear. Now you have a very important situation dealing with aggressive orders. As we said, aggressive orders do not come into the order book. Yet you receive them, you receive this information, and then the question what to do with aggressive orders. An aggressive order, in particular market order, but any aggressive order, which you know it is aggressive because, for example, it is a buy with the price, if the price is specified, greater than or equal to the best ask, or it is a sell with the price buy with price greater than or equal to lowest ask, okay, or it is a sell with price less than or equal to highest bid, then you know it is aggressive. It will not come into the order book. Instead, it will result in a sequence of matches. And as one of you had already noticed, so it results in matches. All right. And because you do have the order book already constructed up to this point, then what? You can predict those matches. So by looking at the aggressive order and the matches, you can predict the matches. All right? Yes. Please say yes. What will you
Yes,
recommend?
yes.
So you say yes. Okay. The question is whether we should do that. Predicting matches would arguably complicate the order book construction. So if you want, you do this prediction, and this is a very, very, very good test for the validity of your order book construction. If for whatever reason you think that it is A, too complex to implement, and B, it does slow down the order book construction, then you can skip it and do not predict matches. But I suggest, yes, implement this if you can. Predicting the matches is a relatively difficult task to do, because imagine that your aggressive order cannot affect just one price level, for example, the lowest ask or the highest bid. It can occur many price levels, and can affect many price levels, and it may even be the market order, in which case you need to calculate which price levels it will affect, up to the point when this market order itself, aggressive market order, is completely filled. But you can do this, and by predicting these matches, you construct the predicted array. Predicted array of matches, which would contain, for example, a list of pairs, order ID of passive order matched, okay, of passive order matched. What else? Obviously, price and quantity matched. So that's the result of your prediction. You traverse the current order book and you predict, this aggressor with this side quantity and possibly this limit price. So an aggressor is characterized by the side quantity, and maybe, if this is not a market order, maybe limit price. If limit price is not given, we conceptually say that the limit price is okay. What do we substitute for the limit price if it is not given, if it is a market order? Limit price is conceptually plus infinity for side equals to buy. So we are buying aggressively with a potentially unlimited price. And it is equal to 0 for side sell. Okay. Then you take this aggressive order. If the aggressive order side is buy, then you predict matches, where? On the opposite side. That's important to remember. On the opposite side of the order book. If the order itself is for buy, then matches occur on the sell side of the order book, on the asks. If the aggressive order side is sell, then matches occur on the bid side of the order book. That's important to remember. And to implement this, calculate this predicted array. Then, once you calculating this predicted array by itself is not that much useful. What can you do in addition? You calculated the predicted array, and then you compare. That's a very interesting thing. You compare the predicted array of matches with actual matches. How do you calculate the actual matches? How do you know the actual matches? think about this for a minute and we will discuss it when you come with some solution. So please don't be shy. Tell me, okay, we calculated the array of predicted matches. How do we compare it with the actual matches? That's important to understand. What do we do? What is the actual match in that case? So first of all, the actual match will manifest itself with some order action, which you probably read in subsequent lines. So please don't be shy any ideas, because if you don't come with any ideas, then I would assume that it is a difficult situation and you don't know what to do. And if you don't know what to do, we'll need to dedicate probably a special lab session discussing what to do.
I would order them somehow. For example, the orders should be completed in a natural order using FIFO order, first in, first out. And I would firstly somehow sort this arrays and then compare one by one.
Yes, generally yes. But you see, the array of predicted matches, we already got it. So yes, you examine the opposite side of the order book and you calculate actually how many and which orders this aggressive order would really aggress or match. But now we need to go to our file again and see the actual matches, which means traverse our data file down from the current line. The current line is that of the aggressive order. From the current line corresponding to the aggressive order. Okay. Now, what is important is that all matches will come with the same timestamp, exactly same timestamp as the aggressive order. All matches will have, first of all, action. What is the action for a matched order? It is either delete, the passive order has been eaten up completely, or maybe change. And the change can be only once. All right. So an aggressive order matches passive orders, which results in delete of passive orders. And finally, the last passive order may be partly filled when the aggressor is already completely filled. And then the corresponding passive order may or may not be completely filled. If not completely, then it is a change. So we get delete or change. So all matches will have action delete or change with timestamp exactly equal to, you remember time steps is in microseconds. So timestamp format is hours, minutes, seconds, and then microseconds, 6 digits for microseconds. All right, with timestamp exactly equal to timestamp of recursive order. Okay, and obviously that's not all. They must have side. These all matches must have side. Better say it here. And side equals to the opposite side of aggressive order. So you do this some kind of look ahead. When I say traverse, it means look ahead. There is a main traversal of your data file, of your sequence of orders. If you encountered an aggressive order, you do a sub-traversal look ahead in order to identify possible possible matches, and that way you construct the list of so you get same list of actual matches in the form of order ID, like for projected one, price and quantity, which is actual matches. In order to compare the two, predicted matches and actual matches, you need to sort both, say by order ID, and sort this by order ID, and compare. Okay, and again, if they do not compare for equal, and one of your colleagues had already just manually identified the situation when, for example, the total quantity in the actual matches, sum of quantities in the actual matches, appears to be greater than the original quantity of the aggressive order, which would mean that these two arrays do not compare for equal. This is an error in the data. Again, we probably do not make any corrective action in this case, but at least we produce a warning, and then it is a very good idea to count the number of such warnings in order to understand the quality of your data. If it happens very, very infrequently, then it is probably okay. If your predicted array of matches starts getting significantly different and very often different from the projected matches, or let alone, if they are never equal, almost never equal, then probably something is wrong with your either prediction or construction of the actual matches array. And although it doesn't bear any direct impact on the order book construction, it would be important to check why, because it might be that you do not understand or do not apply correctly some principles of order analysis in this case. So you simply for example, do predictions wrongly because you do not understand exactly how these predictions would be calculated, predicted matches. So ideally, we would have only infrequent deviations between the two. So working with predicted matches is a very, very important story. Also, with the Moscow exchange, how we do this is relatively easy because we can rely on timestamps. So we really know that if a match occurs, then the timestamp of this match up to microseconds is same as the timestamp of the original aggressive order. Sometimes it might not be the case. I'm not talking about this data set and the Moscow exchange, but once I was solving a similar problem for the FX exchange called Hotspot FX. Now it is a part of CBOE, Chicago Board of Options Exchange, one of the American exchanges, for Euro USD FX. And the timestamps of the original aggressive order and the sequence of matches could be different very significantly, not just different in milliseconds, but sometimes different in seconds. That was the way of how the data were recorded, because probably they used two completely independent streams for order book updates and for matches, and timestamps were not synchronized somehow. It's difficult to say why not, but it was a matter of fact. They were not synchronized. In this case, attributing predicted matches to actual matches was a very, very, very difficult task, which required basically comparing uh, those arrays up to an arbitrary, not yet known shift in the timestamps. Yet it was important to actually to do because there are some reasons. I think the information available in Hotspot was not complete, and it was interesting actually. They had a very peculiar policy that you receive full information on order book updates, but on trades you receive only prices without quantities. So the quantities had to be reconstructed. And in order to reconstruct the quantities, you had to simulate those matches. So, which was not an easy task, also because of timestamp mismatches. Yet somehow it has been done. So what we are doing now, and I strongly recommend you do it, you do calculate predicted matches and compare them with actual matches. We do a kind of data analysis very much relevant to real life situations. So that's what you should really do in real life. Okay. Um, Fine. Any questions about this? No questions? Okay. Now let us see what are the typical situations, so what kind of different behaviors can we encounter from market participants. We already mentioned, you have probably heard about this in your lab sessions, that there is a very important type of market participants which are called market makers, MMs. This is a very, very, very important type of activity. Can you explain, first of all, have you heard this term, market making, MM, and what MM is?
Personally, I didn't hear it.
Okay, I can tell you that if you become a good market maker, then you can forget all other types of activities. You don't need to do software engineering, nothing. You only do market making for living, and you earn probably very good living out of market making. Market making is really making money out of air, thin air, apparently without any effort. In fact, it is not true, not without any effort. Actually, the life of a market maker is a difficult one, very difficult. Why difficult? We'll see. So what would market maker do? Market maker considered the order book. So again, asks bids, and imagine that a market maker puts a certain order, symmetric, for example, size n, on both best ask and best bid. So these orders, these two, both for buy and sell, are ours. So it is us, the MM, who put this order, placed this order, and this order into the order book. All right? You can say for what purpose. So what do you want actually, to buy or to sell? The answer is both. Now suppose that two different aggressors, the market maker is the same, but the aggressors are different. One aggressor came to lift this order on the ask side, and another aggressor can come to hit our order for size n at bid. There is always a positive bid-ask spread. That's the spread. So what happens? We sold quantity n, we bought quantity n, so we have no position, no dollars as a result. But having no dollars as a result of this symmetric execution, we got some rubles. Because you see, from our point of view, we sold n, sold quantity n at ask price, and we bought n at bid price. Why? Because we did it passively. We are not aggressors. We are market makers. We by ourselves, we do not enter aggressive orders. We do not cross the bid-ask spread. So we placed our order to sell at ask, and eventually it is lifted by an aggressor. So we sold at this ask price. We bought at bid price. So we immediately generated a profit, which is equal to n times ask price minus we sold at a higher price than bought. Therefore, we generated a profit n times ask price minus bid price. And best ask minus best bid is precisely the spread in this case. To give you an example, if, for example, we are at the Moscow exchange, and let's say the very typical n can be 100K dollars, of course. And the spread is, you remember, for example, 0.02 rubles per USD. So 100K multiplied by 0.02 equals to 2K rubles. So each symmetric buy and sell would result in 2,000 rubles profit. And typically, if when both actually your best ask and best bid are filled, you immediately place another pair on the best ask, best bid, and so on and so on. And let's say every second on average. The trading session in the Moscow exchange is from 10 a.m. Okay, today's trading session has just started until 23:50. This is approximately, you can calculate exactly, it is approximately 50,000 seconds. So 50K times 2K, 100 million rubles. By running this very simple strategy, you make 100 million rubles a day. If our calculations are correct, but I think they are correct. I think it's a good idea. What do you think? Should we try? Well, there are some overestimations here, of course. So let us verify whether it is realistic or not. If we said this happens every second, then what is the total trading volume we do? Total trading volume of our market maker. First of all, each buy and sell results in two trades, obviously, one for buy, one for sell. So the quantity is 2 times n traded every second. And n is by itself 100K, which is 10 to 5. Therefore, it is 2 by 50, it is 100, 10 to 5, 10 to 3, which is 10 to 10, which is 10 billion USD. So in order to do this, we generate a trading volume of 10 billion USD per day. But the total trading volume of the whole currency section of the Moscow exchange, and it's not only of us, it includes all other market makers, all other aggressors, and so on. In reality, trading volume equals to daily trading volume is less, and it is, for example, less than 5 billion. So obviously, we significantly exaggerated our trading volume, and we got 10 billion for ourselves only, whereas in fact the total is only 5 billion. So reduce our volume by, let's say, 10 times. But even if we reduce our volume by 10 times, we get a RUB 10 million per day profit. Wow, okay, maybe even this is not realistic. If we reduce it even by 100 times, and we still have 1 million per day profit. Somewhere in this range. So then the question is, what are we doing? Why are we studying data mining in the first place? Let's rush to the Moscow exchange and become market makers. What do you think?
I think there is something that prevents us from getting like this is only in theory we can get this like money. In real
Actually,
life.
the process that happens in exchange not could be easily described by the functions and everything because the decisions of people which are not so predictive.
Okay, but you see, we have described the machinery of how this can potentially work. So what would really prevent us from making these insane profits of millions of rubles per day? What is the big thing we miss in our picture here? There is some assumption which we made implicitly, and which need to be addressed very carefully.
Probably the number of transactions is limited.
Not that much, because you see, if we say a transaction every second, then it is really just, huge volume, 10 billion per day and 100 million rubles of profit. Okay, we reduced it by a factor of 100, which is a very, 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 I would say, conservative estimate in this case, and yet we arrive at 1 million per day of profit. Well, first of all, in order to be able to do this, you need to be able to send orders of 100 million, of 100K dollars. So you need to deposit some funds to the exchange, because if you do not have any so-called initial margin or initial, let's say, deposit, you can't generate so large orders. The Moscow exchange provides you with a leverage of factor 10. So in order to place an order for the size of 100K dollars, you need to deposit 10K dollars to the Moscow exchange. But that's not prohibitive. 10K dollars is a big amount, but not prohibitively large. So that's possible. 10K dollars is nothing that much huge. So technically it is possible. A very, very important assumption, you see, please have a look here. We placed an order on the ask side, we placed an order on the bid side, and then we assume that both of them are filled by these two aggressors in a very short period of time. So one order is lifted, another order is hit, right? But this might not be the case. So what would typically happen is that only one order is filled. Another one is not filled at all. And then you are in a completely different position And all these huge profits can result in losses, in fact, instead of profits. So problem with MM, asymmetric execution. No one would guarantee, because you have no control of how this happens. If you fire up aggressive orders, then yes, you know that they are going to be filled, right? Because they're aggressive. But now you are placing passive orders. Therefore, you have absolutely no guarantees whether, if at all, either or both of them are going to be filled, hit or lifted. You are at the mercy of the market and actually of the aggressors, and the aggressors would decide what to do with your orders, fill them or not. Typically, you would have asymmetric, one-sided execution. So what would happen? So that was your order book. So that was your size N here, and size N here. But then suppose that, let's say, only a hit was received. Hit, but no lift. And suppose that an aggressor came. Okay, this was again 75.41. This was 74.99. An aggressor came, and the aggressor completely eliminated this best bid, where the ask is unaffected. So that was your initial position number one. Then hit was received. So the order book now looks like this. Your ask side is unfilled as yet at 75.01. But the bid side is now completely smashed. I mean, the best bid. And now the previous level is exposed at 74.98. That's how the order book would temporarily look like when the best bid is eliminated, is eaten up by a hit. Okay? So what does it mean? It means that basically your buy order is filled, but your sell order is not filled. So basically you are long means bought, you are long quantity equals to N at price, at which price? You bought at 74.99. Now you are so-called in a position. You bought dollars, you long dollars. Now you have dollars on your account. Well, they are not transferred to your account yet, but you have a position, long position in dollars. Okay, what will happen with the order book after that? The bid-ask spread, it used to be 0.02 here. Now, the bid-ask spread widened to 0.03. As physicists and philosophers of the 18th century would say, the nature doesn't like vacuum. You know, there was a proverb like this. Therefore, indeed, other market participants would put other orders to narrow down this bid-ask spread. Now, the question is, what would happen? You can take a number of actions, they can take a number of actions. Typically, what will happen then, typically, because it was the buy side which was filled, then people start adding orders on the ask side. So there was 7501 with your order for the size N, and then someone puts another order, for example, at 7500 on the ask side. These are still asks. And then there are bids starting from 74, 98. The bid-ask spread is reduced again to the standard value of 0.02. So it widened briefly when the 74.99 bid level was smashed, and then it closes again to the standard value of 0.02 because someone has added an order on, and that's important, typically on the ask side. After a lift, a new order would typically appear on the ask side. Why? It typically follows from the same problem of a market maker, which we discuss now. You will see in a second why. And the bid-ask spread is back to 0.02. Now you have an unfilled order, an unfilled cell. That's your order for the quantity N. And this order is now standing in the depth, in the rear of the order book on the ask side. So now this order for the size for the size N is less likely to be filled because it is not at the best ask anymore. It is in the rear. Okay. If we calculate the price of our USD ruble as mid price, so the mid price was 7500 at this point, right? Now the mid price is 74,995 in this situation, that the mid price. And now the mid price is 74.99. So what happens? We entered a long position at the price 74.99. Now the mid price is 74.99. Typically, if an order book bid level, for example, at 74.99 was completely eliminated by a hit, it gives rise to a microtrend. So you see that the mid price is already decreasing. It was 75.00, then it was 74.995 here. Now it is 74.99. And this may continue. So you may receive, not you, but the bid side may in this case receive yet another hit. And this typically happens. So a microtrend occurs. With this microtrend occurring, due to the same mechanism, you would see that the mid price is falling, going down. This is equivalent to what? This is equivalent to the thing that you have a position in dollars, so you bought an dollars at the price 74.99, but the price is now falling. So you bought dollars, but the dollar price is going down, which means that due to this asymmetric execution, you now have negative unrealized P&L. P&L is profit and loss, and in this case it is really loss because it is negative. Negative unrealized P&L with your position equal to N. What can you do? You can simply sit and wait in the hope that the prices will return. And when the prices return, you somehow get this order eventually executed, and yes, you earn your profit. But this microtrend, you don't really know how extensive it could be, whether it is a good idea just to sit and wait. It might be that, the price falls that much that you decide you can no longer wait because who knows whether it would return or not to the original 7500 midpoint and then your ask side getting executed. Who knows? What if it doesn't return? What if it only returns maybe after a day? You never know. And it might be that in order to close your position, you eventually sell your dollars, but now because the price is falling, you sell it at a lower price. So now, for example, if you aggressively sell, you would sell at 74.98 and you bought it at 74.99, which is not a good idea. And therefore, instead of making this profit from market making, you got a loss. So market making is difficult because microtrends occur and you don't know what to do with your one-sided fill due to those microtrends. And that's why the analysis we are doing, especially with the order book structure and aggressive orders, if done very carefully, and then we are actually beyond data mining and we are well into machine learning, but we'll touch upon that, can result in some kind of optimal strategy for market making. So, for example, if you can predict the magnitude of the trend, then you know what to do. Either wait for the price to return to the original level and your ask site is going to be filled and then you lock in your profit, or maybe you are at the beginning of the big downward trend, in which case you need to sell aggressively your dollars when it is not too late. You fix, in this case, you lock in a small loss in the hope that next iteration when this downward trend is over, you again place best bid, best ask, and then you earn something. So trends are the main enemies of a market maker. The market maker do need to perform all that data analysis in order to construct the optimal strategy of the market making. And that is a major, major, major important application of machine learning in high frequency algorithmic trading. And that also explains why we have a lot of deletes, because a market maker would very often move the orders. So, for example, once this order for the size N appeared to be in the rear of the order book, or maybe even before that, when the order book spread has widened, you may not want to allow another one to place an order below you, but you yourself would move this order for the size N to close the bid-ask spread, to move it a little bit down in order to increase the probability of this order being filled, and so on and so on. So this high activity of market makers, and there are quite a few of them, is the major reason for a lot of delete orders occurring. They are simply moving and moving and moving, canceling, replacing the orders in the process of market making. And that's important to understand. Maybe if we are successful enough in our studies, we'll come up at least with some kind of predictive strategy, which may theoretically allow you to become market makers. Actually, you have all data available at your hands now in order to start thinking and experimenting and possibly devising such a strategy. And who knows, maybe you can really come up with a strategy for market making, which would make at least 1 million rubles per day in market making, and then you probably don't need to do anything else. Thank you. Any questions? Was it more or less clear how market making works? And why it is not as easy as it may seem at the first glance?
Yes, yes.
Okay. Inspiring?
Yeah, kind of.
Hopefully.
Of course.
Kinda.
Thank you. Thank you. Let's continue. Today, I will publish all our screenshots and YouTube recordings of our lectures of yesterday and today, and finally the syllabus. But you already know what we are going to do. We are going to become market makers. That's our objective. Thank you.
Thank you. Goodbye.
Bye.
Thank you. Goodbye.
Thank you. Goodbye.